This conference will now be recorded.
Okay, so we begin today looking at the master budget process. Major issue that faces any company, your company that you're starting, is liquidity, month-to-month liquidity. For a lot of companies, most of their revenue comes in the last quarter. And so they've got to have cash to sustain in the interim quarters. So most times they're going to get a line of credit for the slow months in the summer, late spring, early fall. Then once they have their major sales during the holidays, they'll pay that loan back. But if they don't have access to that line of credit before they need it, then they're going to get shut down. So they have to do participate in the master budget planning process, make arrangements with a bank to secure that loan. Let's look at an example. Suppose we have J Bookstore. Its sales are going to be 20, 10, 10, and 160. Selling price $50 a unit, all sales are cash. Beginning cash balance is 100. Cost of the books is $20. That's the variable cost. All purchases paid in cash. Then I switch to administrative expenses are $1 million and they're fixed. And you want to have $100,000 in the bank at all times. So that's what we're trying to do. Now, we simply look at the income statement. We can see that our sales are going to be about $200,000 and our cost of $50,000. So we're going to make money. But notice that these sales are in the fourth quarter. So what happens when in quarters 2 and 3, the sales are really weak? So we will prepare our cash budget and an income statement also for the bank showing, okay, this is the income that we expect, but this is what the budget looks like. So let's look at what that cash budget would look like. And in terms of receipts, we sell the units of $50 per unit. In the first quarter, we're selling 20,000 units. And our beginning cash is $100,000. So we got beginning cash of $100,000. So we have all cash sales. So we sell 20,000 units in the first quarter. So how much cash are we going to have? We sell 20,000, we get $50 each. So is that going to be roughly $1 million? So let's assume that's roughly $1 million. So we got cash available of $1,100,000. And okay, so we got two expenses that we got to pay for. One is going to be the book itself. So here we have raw materials, ink, paper, labor, all of that. But since we aren't manufacturing the book, we're just selling it. So I'll move the cost of the book here. Cost. So we already have the books. So we got to pay $20 per book. So if we sell 20,000 books, then we got to pay how much for the books? Is that 400,000? And our administrative expenses, we said, are $1 million per quarter. That's our fixed cost. Every quarter, we got to pay administrative expenses of $1 million. So that's each quarter. So we find that in this first quarter, we got $1.1 million, but we got to pay out $1.4 million. So we're short $400,000. Well, total payments. Now we got $1 million. We're short $300,000. Because we had $1.1 million, our expenses are $1.4 million. So how much of a short-term loan do we need to keep our doors open? How much of a short-term loan do we need?
300,000.
Well, we got 300,000. Our ending cash balance is zero. If we set our ending cash balance, always had to be 100,000. So how much of a short-term loan do we need?
400,000.
400,000. And if you didn't have this arrangement with the bank ahead of time, then you couldn't go get the money and you'd be thrown out of your facilities. You know, these would be rental expenses. People would throw you out of your facilities. Let's see what happens in the second quarter. We only sell 10,000 units. Okay. So 10,000 times 50 is going to be what? 500,000? And we do have our we do have our 100,000. We collected 500,000. So the cash we have available is going to be 600,000. Still got to pay the $1 million. How much we got to pay for the books? We sold 10,000 books. The books cost $20 each. So we got to pay 200,000 for the books. So our total payments are going to be $1.2 million. We only got 600 available. So now expenditures exceed receipts by $600,000. How much we're gonna borrow this time? This number has to be 100,000. So how much we gotta borrow? How much we got to borrow?
$500,000.
700,000.
How much?
700.
Yeah, 700 sound like a better number. Okay. So every company that you see, especially every retail company, they're doing this because when nobody is buying early on, they've got to get this arrangement with the bank, or they're going to, they'll be shut down. All right, time for y'all to work. I want y'all to do quarter 3. So in quarter 3, the sales are still 10,000. That's the third quarter, still a slow quarter. Selling price 50. Beginning cash still gonna be 100. Cost of books is 20. And those administrative expenses are still $1 million. So can you all do this cash budget for quarter 3?
Professor Boyd, can you scroll back up so I can take a picture?
I take a picture. Take your picture.
Got it.
All right, Kevin, what's the first number gonna be in here, Krishan, since you took your picture?
$100,000.
All right, so 100,000. We always start with 100,000 at least.
I'm on mute.
Okay, unmute yourself. What are the collections gonna be?
$500,000.
We sold 10,000. How many are we getting? 50 all these, so it's gonna be 500,000 again. So the cash available is 600,000. What our expenses gonna be? Administrative here. How much are the books gonna cost us? $10,000 books at $20 each. How much are these books gonna cost us?
$200,000.
200,000. So we're at 1,200 again. So we still deficient another 600,000. So how much are we gonna borrow this time?
700,000.
100,000. So we can keep our balance of 100,000. Then Black Friday and the holiday season come in, and we sell 160,000 books. We sell 160,000 books. So how things gonna look now when we sell 160,000 books? Can you all figure that out for me? You're selling 160,000 books. So you got your $100,000 carryover. How much money you gonna collect on selling those books?
8 million.
8 million even?
Yes.
So the cash available we have now is what? 8 million. Still got the million of administrative costs. How much are the books gonna cost us? $160,000 books.
3,200,000.
That's 3,200,000. So now our total cost of what? 4,200,000. So what's our excess cash? 8,000,001 minus 4,000,002. We finally get some excess cash. How much is that? Is that 3,000,009?
Yes.
You pay back your loans. How much did you borrow? $1,008,000.
Yes, Professor Boyd, it's 1,000,008.
So how much money we have left over now?
1,000,008.
Now you paid your loan.
Oh, you gotta subtract it. 4,300,000.
Oh,
Wait, you subtract the 33,900,000 for, okay, yeah, that's wrong. That's wrong.
So it's gonna be 2,100,000.
Yeah.
glad to hear Stafford is in the house.
Yeah, I was having some technical difficulties, but I'm here.
Okay. So, but you never get to this point. You never get to this point if you don't have a plan in place with a bank. A bank's not going to loan you money when you're in the red. So you get with the bank and you show this is what the cash flow going to look like. We're going to pay you back, and of course you'll be paying them interest too. So even though you were going to make $2 million, okay, if you look at cost of books and selling expenses, you're making $2 million. You would never get to collect your money, your 2 million plus the 100 you started with, if you didn't have a line of credit. So when you see a company going out of business in the mall in the summer, that's what happened. They didn't create that line of credit or anywhere. So you have to do that. So that's just a little exercise to show you, the cash budget that you got to prepare for your product on a quarterly basis. Now, since you are manufacturing something, it's a little different. When you make something, you got a sales budget, you got a selling and administrative production budget, inventory budget, direct materials budget, direct labor budget, manufacturing overhead budget, the cash budget we just said, and then a budgeted balance sheet and budgeted income statement. So that's what we prepare in the master budget process. Okay, we have to prepare all of these budgets, which leads to a budgeted income statement, balance sheet that ties in. So this is our major takeaway from the course. Prepare a master budget for the cash budget, and the income statement and balance sheet are going to tie in. We don't just throw numbers in. So we got a process that we go through to do that. Those first budgets are called operating budget. Then they lead us to prepare these pro forma statements. We're going to do the sales budget today, and I'm going to get into detail of how we do that on a demonstration problem, which should be in your content, course content, and then we make journal entries. When we make journal entries, we can post them to the ledger, get a trial balance, and then we can get a balance sheet and an income statement that balances. So as we prepare these schedules, we're making journal entries so everything ties neatly in. The production budget would not have any journal entries, but it provides useful information for doing the raw materials budget and the direct labor budget. The manufacturing overhead budget, we do it simply. We just work with the fixed costs. And we have a journal entry, selling expenses, and a journal entry, administrative expenses, a journal entry, then the capital operating budget, a journal entry. So we prepare all of these budgets, then we're able to do the financial statement. So all of this information, it's in the primer to show you exactly what you got to do with your project. So I think I sent you all this problem, correct? Did this problem come to you all? In course content, master budget?
Yeah, it's in there.
Okay. So as you work with your project now, you've got to have all of these assumptions that we have here. So these assumptions have to be added. When your sales are going to occur, your selling price, all the sales will be credit sales. That makes it simpler. When you're going to collect your money, we make these credit sales, we collecting 50% the month of sale, 30% the month after sale. You have to have a desired ending inventory. You have to show the raw material. This is the book, so we have two. And how we pay for the raw materials, the labor, the manufacturing overhead. There's depreciation in it, and we'll see how that impacts it. Selling expenses, assuming 20%. And of course, you were working on all of this for your project, most of it, but you didn't have it quarterly. So the fixed expenses move quarterly. The variable expenses vary with, with production and sales.
Professor Boyd, I have a question about the project 2 that we're supposed to turn in by 11:59. What all do you want on the financial statement? Because I see different things. Well, your financial statement that you have posted, the example that I got online, it's really different.
Well, just work with it to make it reasonable. What I want is the just that template for stage 2 filled out.
The template for stage 2?
Right, it's in Blackboard.
Okay.
And what we're doing now is showing you where that's going to lead you. Okay, so we come right back to the master budget quantitative solutions. The first thing that we saw to work with, selling price, variable costs, ink, paper. Our labor, bad debt and selling expenses. So we do some of the same things. Okay. So let's go back and look at our assumptions and see if we can bring them forward. you're told the selling price is 100. Okay. So you know that's going to look different format, but it probably works better in terms of what we're doing here to make sure you got everything in. So this is the format that you use on the project. And also you see this on the final exam. So we're doing the same thing. We're getting the unit cost. So we got the selling price. What is the unit cost of the ink?
$10.
Two ink
$10.
cartridges.
Oh, well, $20.
$10.
Okay. So the ink will come in here at 20. What's the paper gonna be?
Mhm. 8.
2 rings per book. How much is that gonna be?
8.
That's gonna be $8 for the paper. See, we can get this labor right. We pay the workers $20 an hour. They make 10 books per hour.
2.
It says the labor is 2. That's it. So we look up here and we see that our collections are 50 and 30%, 80%. So our bad debt is going to be 20% of the selling price. Dollars. Expenses are going to be what?
Be at 20.
Yeah, 20%.
Professor Boyd, what were you asking? I couldn't hear you.
We're asking for the bad debts, and we were saying that 80% was collected. So the bad debts were 20%, 20% of the selling price. And so the selling expenses, 20% of the selling price. So when we add all of these up, how much do we get?
70.
70. So what is our contribution margin?
30.
Our contribution margin is 30. Now we got to pick up our fixed costs, and our fixed costs are always going to be manufacturing overhead, administrative expense, interest expense. So we go back up here, manufacturing overhead. See, the overhead is $25,000 a quarter. Well, we need the total amount now for the whole year. So we need administrative expense. What is it gonna be? Administrative expense is gonna be what? 200,000.
Hey, whoever that is, can you please mute your mic?
Get your mic, Stafford.
Oh, that wasn't me.
Oh, what?
That noise wasn't me. That's why I couldn't hear you before. But I will mute my mic.
Now, and our interest is what? 25,000 a quarter. So our interest expense is going to be what? 100,000, correct? So what are our total fixed costs?
400,000.
So what quantity do we need to make to lose $100,000? So when our target loss 100,000. So what quantity do we need in here so that when we fill this information in, we're gonna lose $100,000? Can't hear you all.
Don't we gotta do the equation?
Yeah, well, you got the equation memorized,
Yeah.
John. So let me have it right quick.
The equation?
No, the answer.
Oh, okay, hold on. So
You talking about that fixed cost minus outlet divided by, that's what you're talking about?
Mm-hmm.
No, I don't know how to memorize
Those
that.
are the only equations I told y'all to memorize.
That's a lot.
Our contribution margin is 30?
Yes.
Will the quantity be 10,000?
Yeah, that's what I got.
I will assume it's 10,000. So let's check it out. 10,000 times 100 is what?
It's 1 million.
The variable cost is going to be what? 70 times 10,000. So that's going to be what?
70,000. 700,000.
Contribution margin is what? 300,000, right? Dollar amount. Our fixed cost, we bring that down 400,000. So our net income becomes a loss of 100,000, which is our goal. So it's always a good idea as you begin to work on a problem or to work on your project, that once you get a quantity, you run it through this formula to make sure it's going to yield the result that you're supposed to have. And when you finish all those schedules, you got to be at the same result. Okay? Okay. So what we do next?
We got to do the break even, right?
We won't worry about that. We're just going to stay on this first year. I'll let you all do the break even later. But we have here a quantity of 10,000. So I'm gonna bold that. So once we get this quantity of 10,000, we're gonna put it in the sales journal. $10,000. Okay. So it kind of needs to be right. I mean, we're gonna put it in the sales schedule. So it kind of needs to be right. Else you have a whole lot of numbers. So the quantity is 10,000. We say how many of these sales are going to occur in the first quarter in this problem? 10% of what? 1,000, right? 20%, 2,000. 30%, 3,000. And 40% of 4,000. So all I did was I calculated my quantity of sales to lose 100,000. Then I came to my schedule, I put it in, then I put it in at these amounts. Our selling price is how much? Isn't that $100?
Yeah, the selling price was $100 across the board.
Okay, so what are our sales in the first quarter?
You mean the total sales?
Mm-hmm.
So what do you mean, like 100,000? Are you saying like is it 100,000 or like a million? Like is that time?
100,000, would that be 1,000 times 100?
Yeah.
Okay. And we said all of these sales were credit sales, right? Our bad debts are gonna be what? %20, right? So our bad debts are 20,000. Any question on that? Whenever you see a JE, that means a journal entry is needed. We'll get to it in the end when we do our totals. Now we had these credit sales of 100,000, and we look up here, and we see that we only collect 50% in the month of sale, a quarter of sale. It should be quarter of sale. So we made sales of 100,000, but we're only collecting 50,000.
Professor Boyd.
Yes.
Hold on, let me see something real quick.
How did you get 50,000, Professor Boyd?
It says collections in the month of sale and our assumptions
Oh, okay, never mind. I see that.
are 50%. Collections 50%, then 30, and these should be quarter after sale. So if I go in my chart, I'm going to put collections month of sale dash parentheses 50%. Wait a minute. 50 shift percent. Then I'm gonna get the other 30% the month after sale. Next quarter. So the key thing, I had 100 in sales. I'm only getting $50,000. So my total collections are 50,000. With me? Good.
Professor, why didn't you put it
It's a mystery.
Because is this on the Excel sheet? Because did you just switch from the stuff that's on the Word document to the one that's on the Excel sheet? Because all the extra stuff, I don't see it on mine.
I'm just on the paper one.
It's on the Excel document.
Okay.
Yeah, but if you got different sheets on the Excel document. I'm just working here. It's kind of easy for me to write it, but you should be filling this in on the Excel spreadsheet.
Oh, I see.
Are you doing that?
I am now.
Right, I wasn't either, but I figured it out once you start adding bad debt and stuff. I was like, that's not on here. But yeah.
Well, it wasn't on here. I just put it in terms of the assumptions.
Yeah, no, it's okay. Oops.
Okay.
Professor Boyd, for the first month, why did you leave that one blank? The collections for the first month.
The first quarter, because we weren't in, this is the prior quarter. This is the month of sale. First month after sale. First quarter, you don't have a month after sale.
Okay.
So you don't have a dash here.
Okay.
Now, your next year you would. Let me put these dashes all the way across here for this first year. Okay, so we got $50,000. Now let's see if we can go see what happened in the second quarter. We sold how many? 2,000, right? So what's our sales dollar gonna be now? $200,000. And all of these sales are credit sales. Bad debts are gonna be 20%, so they're gonna be what? How much might bad debts be?
40,000.
40,000. Collections in this month of sale, we're gonna collect half of that 100, okay? So we got 100,000. Then we're gonna reach back and get 30% of the prior month or quarter. So for these credit sales for the last quarter, we get 30% of those, or we get $30,000. Now, if you think about TSU, when they extend you credit, you got the full bill at the start of the semester. You pay some in August, half down, then you pay some in October, some in September, some in October. So we're just looking at it from that standpoint. TSU is getting 50% from you in September, August, 20% in September, 20% in October, 25% in September, 25% in October, because you're paying the full amount. That's all we're doing. So we're just looking at it from the standpoint of the company receiving it. So they make the sale, but then they get half the collections then they get the other 30%. So their total collections in the second quarter are $130,000.
Wait, Professor Boy, I'm still confused on this collection first month. How did you get the 30,000?
Where are you? Here?
Like, how did you get the 130,000? Well, how did you get the 30,000?
You sort of go counter corner. See, I go counter corner. I take 30% of this number if I can draw a line. Let me see if I got my drawing tool here. I don't know if it's gonna let me do it or not. Maybe it will. There you go. Then I take, I went the wrong way. I'm actually supposed to be up here, not here. Drawing tool. These are drawings. Let me draw it again. I'm gonna bring these sales down here. And I'm gonna take 30% of them.
Professor Boy, you fancy today.
Okay, so the people paid 50% of the 100 in the quarter sale. They pay the 30% the next quarter, just like a lot of you do with your tuition. You pay half down, then you pay another third later or whatever. Got it?
Yes.
Okay. Okay, so, well, I'll leave that there. Okay, so let's go to the third quarter. What our total sales in the third quarter? You all should be ready to talk now.
$300,000?
300,000. And these are all credit sales. Now, how many of bad debts are gonna be how much? 20%, so that's gonna be what?
30,000.
60,000? Oh, okay, my bad.
How much?
What was the percentage?
20.
Up to 300,000?
How much? What's 2 times 3?
6.
There's 60,000.
8,000.
And how much are we gonna collect? Says
150,000.
150,000.
How'd you get that?
50% of the total.
50% of the current sale.
Okay.
What's gonna be in this box here?
I should have been using formulas. That way I could kept them. So that's 30% of.
Get my drawing tool.
30,000.
We're gonna take this number and drag that over here and take 30% again.
60,000.
So our total collections now are what?
Oh, shit.
210?
Yep.
Any questions? Now you know this is you all's problems. This is an in-class problem, right? Good.
What's in class problems? What we
Well,
just did?
Nah, the one we're working on now. The one where your team's gonna have an assignment in a little while.
No.
We already have an assignment.
It's for Thursday. Right.
Nice. Yeah, I'll
Okay.
be in office hours tomorrow.
That's what you said last time.
I was in office hours on the day I said I was gonna come.
Okay. 4,000 are the sales. Can y'all handle this one?
400,000.
I'll take y'all word for it. And the credit sales are 400,000. Make your sales all credit. That will ease your problems. Bad debts are gonna be what?
Will it be 80,000?
80,000. How much of this we collecting? 400.
40. 200,000.
200,000. Y'all getting this down now. How much gonna be in this box?
Um, 90,000.
I get 90,000.
300,000 times 30%.
I'll take your word for it. So when we add these together, we have what? $290,000.
Oh yeah.
So I hope you
When you
see
add,
I kind of
which
stuck
one?
words so I could show these arrows and everything.
Which ones are you at?
Say what?
Which ones did you add together for the total collection?
Just 290. 150, 60, 130, 50, and 0.
Hold on. Oh, 50, 100, 150. What? Say that one more time.
50 and 0 gave us 50.
Correct.
130 gave us 130. 150 and 60 gave us 210. 290 gave us 290.
Tracking.
Does that work?
Yes, sir.
Okay, what are our total sales? We had all these numbers. How much do we get?
Let's do this.
4
600.
plus 3 plus 2 plus 1. 4 plus 3 plus 2 plus 1.
680,000.
4 plus 3 plus
Oh, wait,
2.
that's collections. My bad. He said the total sales. My bad. Don't be judging me.
4 plus 3
Is it
plus
a million?
A
yeah,
million.
million might be good.
So that's a journal entry.
How much of the bad debt's gonna be?
$200,000.
I concur.
Journal entry. And what are our total collections?
680,000.
Can I trust you? All right, I will.
You can trust Excel.
Okay. Now, notice that total sales were $1 million, and you might just go and check this little thing here. You see the sales that you said they were going to be $1 million, but they did not be $1 million, so that's a good thing. I guess I can eliminate my drawing to it. Erase our drawings now. Okay, so let's go back up. Look at what we did. We did the sales budget, okay? And the purpose of that sales budget is to determine the total sales as well as the amount of the quarterly collections. First thing we did, we determined the total units based on that CVP formula. We determined the total units sold. Then we came up with our projection percentage, quarterly projection percentages they were put in. We calculated the sales quantity by quarter. We insert the predetermined selling price, calculate the total sales by quarter, and they were all credit sales. Utilize the predetermined bad debt percentage, calculated the bad debts. Utilize the predetermined collection percentages, we determined the quarterly collections and the collections afterwards. Total quarterly collection is the sum of cash sales. We don't have any cash sales. Collection of the current month sales, collection of credit sales from prior quarters. We transfer the quarter to collections and total collection to the cash budget, and we make the following journal entries. We got 4 journal entries to make. And as we're doing each one of these budgets, we're gonna make journal entries, then we're gonna post them to a ledger and do a trial balance and be able to do all of those good things of coming up with financial statements. And when we finish making all of these journal entries, guess what? How much are we gonna lose in the first year?
All of it.
We said 100,000, right?
That's right. So once we make these journal entries, we're gonna be losing 100,000 the first year. So here's our problem. Okay, so let's see. Let me do this so they'll be close by. See if I can copy these journal entries. So here's a chart with our journal entries in it. Try to copy it. Let's see. And I'm gonna see if I can put it right under the sales budget. So that we can make these journal entries. Enter. First journal entry, of course, will be the debit cash and credit common stock. We had some initial cash of 100,000, right? I think that's what we said, the initial cash. So this is the first journal entry we made.
Okay. You ready for the one?
So that was in the assumptions. All of our sales were credit sales. The total was how much, Charles, if you remember?
For the total sales?
Yeah.
Why you put me on the spot?
Early Alzheimer's.
For the first month? For the first month? For the first
For
quarter?
the first year.
It's 1 million.
So we're simply going down the total column, okay? So our journal entries are coming from the total column. Bad debts were what?
200,000.
So we debited bad debt expense for 200. Credit didn't allow for bad debts for 200. How much cash did we collect on those sales?
Was it 680,000?
680,000. So we debit cash for 680. And we credit these collections. So having made journal entries, this is why I always had these problems for you all to work with. You're going to post these to the ledger and do a trial balance. That balances this time. Okay. And one other thing we're going to do, let's see if we can copy.
So Professor Boyd, the cash sales is going to be the total collections.
Say that again.
The cash sales is the equivalent of the total collections.
No, you can have cash sales and credit sales. To make it simple, we're just using credit sales only. So how much were the total collections again?
680,000.
Okay. So once we finish that, we then lift those collections and put them on our cash budget where we're going to fill in. So eventually we're going to fill in all of these to see if we need money. See, we're doing the other one, we didn't have that. We got to see if we need money for ink, paper, labor, and all of those items. So that's what we've got to do. Let me see one thing. Okay. So the rest of this problem belongs to you all for next time.
Are you, Professor Boyd, you having tutoring tomorrow?
Say what?
Are you having tutoring tomorrow?
You didn't come last time. No.
I sent you an email too about tutoring for Friday and you didn't answer. And I couldn't come Monday.
Okay, I didn't see the
You
email.
was there
Okay.
on Monday?
Yeah, you weren't here on Monday, so you can't talk.
Ooh. But I did
Oh,
email
you
you
thought.
about tutoring because I was on the session for 30 minutes and I just logged off because I figured, if you don't come in the 30 minutes, then you're not having it.
I
We'll be
don't
on
know
there
about.
tomorrow.
Okay,
sent you
I
an
think what happens on Monday, I have a meeting for 1 to 2. And so I pushed the principal's 1 back. So, and I said that, but probably didn't stick that we were meeting at 3:30 rather than 3. But that's okay. That's on Mondays because I have a meeting now from 1 to 2. And that
'Cause I
pushes all my hours back in half an hour.
Because I wanted to actually talk to you about my quiz.
Oh, goodness.
Yeah.
Oh, let's don't interrupt this train of thought right now.
Okay.
Professor Boyd,
Okay.
can you scroll back down to where, so I can see the collections and cash available for the cash budget? For the cash budget.
Well, all we've done is put the collections on the cash budget.
Oh, we didn't do cash available.
No, we can't. Only
Okay.
for the first quarter. You can
Okay.
only do the first quarter.
Okay.
Okay. So for each of these areas, you're told what to do. And so I did sales today. Our production budget is the next budget. And I think I'm gonna assign that to team 4. So team 4, in cap locks. You gotta do the production budget. Team 3, we'll let you do the raw materials budget. Let's see, team 5, we'll give you all direct labor. Team 5. And so we got our raw materials budgets. Got our direct labor. Manufacturing overhead. Give that to team 6. You get my note, Powell? Powell. She's still there? Did you get my email?
Oh yeah.
Okay, good.
Which one does Team 4 have?
The production budget, of course, the hardest one.
The production budget? Is that
no other way? Because you told me you were gonna have the highest average in the class. That's what you told me.
which I do?
Good.
Thank you,
Okay.
production budget. And this is due tomorrow?
Thursday. Thursday, you just got one budget. So we have them all here. Team 6.
You said 5 had direct labor.
Mm-hmm. That can be a tricky one at times. So, okay. Team 2 in the house.
Yep.
All right. So team 2, y'all got selling expenses. That's not the hardest one. All right. Is team 1 in the house? Team 1 once. Team 1 twice.
Hey, Professor Boyd, could you go to back to raw materials budget so I can take a picture of what we need to
But
do.
this, I will. Team 6, I'll give you all that then.
No.
They're very similar.
We just want to have the X's.
And then team 5, you all get the capital expenditure budget.
I thought you gave her something already.
So
You
y'all have
gave
so many, y'all have
Yeah,
so
we
many
got-
bars. So I have to, make sure
Wait.
that everybody got something to do on that team.
And we only do where the X's are?
What?
Do we only fill in where the X's are?
All right, what you got to do?
Okay, go
Oh, we
back
got
up to
two.
6.
I
What?
have a
We're
question.
We
Team
got
5 have
time
two.
to get to it this way. Okay, for the production budget, the production budget is the starting point for raw materials, labor. So raw materials and labor, they're the starting point. So the production budget needs to be right, and then you send your numbers to these people so they can do their budget, and you'll see in just a second what I'm talking about. Manufacturing overhead sort of works along. So the idea is that that the class is gonna finish this whole problem because everybody just got 1 or 2 things to do. So what you've got to do, let me go back up here. Okay, for the production budget, you just got to calculate your numbers and make sure they're right so these other people don't get off track, and then you send it to them. Raw materials, you got 2 journal entries to make. Okay, you got these 2 journal entries. Direct labor, you got 1 journal entry. So you see, you only got 1 journal entry, so y'all could do with something else. Manufacturing overhead, you got 1 journal entry. Selling expenses, 1 journal entry. We don't have any depreciation for selling, so you just got 1 journal entry. Administrative expense, 1 journal entry. So only 1 journal entry that you all have to make. The capital expenditure budget got a couple of journal entries, 2. Okay, now let's begin to look at these schedules. We'll begin working on them for the rest of the class now. For the production budget, get to this production budget. Notice that the first line on the production budget is sales. So what the production budget does is it goes up here to this line called sales. It copies it. Then it pastes it here. So it's going to be a good idea if those sales are correct. Then the production budget will come up with the units to produce. So I'm going to get production to work. There's a desired ending inventory production based on next quarter sale. Because you don't run a company with no beginning inventory. So you got to produce not only what you're going to sell in the current quarter, but some of the prior quarter sale. So that's the total needed, less the beginning inventory. This initial beginning inventory is 0, but then the ending inventory is going to come over here to be beginnings in the next quarter, and we'll work on that. Once you come up with your units to be produced, then Raw Materials Inc.'s going to take those numbers and they're going to be at the top of their budget, units to be produced. So both Raw Materials are going to be doing that, units to be produced. Direct labor is going to do the same thing. They're going to go with units to be produced. So we need to get those units to be produced straight. So you got your journal entry and your schedule. Manufacturing overhead, your numbers are separate. You can begin work. Total overhead, less depreciation by quarter. Get your totals in. You can begin work and do that now. Selling expenses, you simply are going to go to the sales budget and pick up the your sales expense by quarter. I think your rate was 20%. So you're going to pick up your 20% of sales by quarter, and you're going to finish yours before we leave today and make your journal entry. Administrative expenses are similar thing. You pull them up, less depreciation, total payment, those journal entries. Very similar. For the capital expenditure budget, we're going to buy the equipment with a long-term note, so you got that journal entry to make. Then there are payments of principal and interest. You got to put those in there. You also got the plan to put your last line on when you see CB, that means it goes on the cash budget. So eventually these numbers have got to go on this cash budget. So everybody's contributing a journal entry and a number for the cash budget except production. So you see administrative expenses, cash budget. You got your last number goes on the cash budget. Selling expenses, cash budget. Your last number goes on the cash budget. Manufacturing overhead, cash budget. Your last number goes on that budget. Direct labor, cash budget. Your number goes on there. Then we'll have here, which one is this? Raw materials, paper, and raw materials, ink. Your last numbers go on the budget. Production, you usually got to get the right number. And don't lead them astray so that they can put the right numbers on there.
Can you explain the desired ending inventory part?
Okay. In the assumption, there's a desired ending inventory. You know what that is?
What you want to get the result for the next quarter?
Yeah, what you want produced. I had an assumption in here. Desired 50% of next month's sale. So we need to go and put that. So your desired ending inventory is 50% of the next month's sales. So what you're producing then is the current month plus 50% of the next month.
So we'd be producing, so under total needed, we would put 2,000 because you're doing the one you have plus half of the next one.
Right. So this would be, you're right, $1,000. Total need is what?
3,000.
Hey, you get 3,000. Just stay over here. Look like your total need is 2,000. Leave those folks astray.
Oh, yeah, 2,000. And then for the units to be produced, that's the part that I'm confused about too.
The unit to be produced, you don't have any beginning inventory, so it's just 2,000.
I see. We would subtract whatever our beginning inventory would be.
Right. So what we're saying here is that you got to produce everything you're gonna sell plus 50% of what you're gonna sell next quarter.
Okay.
So it's available the first day of that quarter. Got it now?
Yes, thank you.
Inventory. So you need to finish this today so these people will have it, because that's their first line. For raw materials ink, raw materials paper, and direct labor, that's their first line.
Okay, so for the second column, would my beginning inventory also be 0?
No.
Oh, it will be. So desired inventory this time is going to be 3,500.
How much?
It's 2,000 plus half of 3,000, so it would be
No, I
oh, I
better
see.
get
1,500.
better draw some more.
1,500.
Okay.
Yeah.
50.
Okay. So 1,500.
Ah, okay. Now you're getting it.
And then total needed would be 3,500. And then my ending inventory would be, I subtract 2,000 from that, right?
No. I like time again. Highlighter. Desired ending inventory becomes the beginning inventory next time.
Oh, okay. I see. All right. Thank you.
You're welcome. Boy, good thing I learned how to highlight right today. In the nick of time. Okay, so you need to get that finished. You got plenty of time. I guess you got enough time to do it so that they have the right number the next time. Okay. Now, let's go back up here to our assumptions. Manufacturing overhead is your total overhead. You got your numbers in already quarterly. All you got to do is copy these. Boom, copy, put them down there. Same thing with depreciation. All you got to do is copy your numbers. Copy.
Wait, I'm sorry, can you go back up?
Well, I just copied something first.
Oh, okay.
So all you got to do, then your depreciation, then, so you're not doing too much that Team 5. Got it? Then you're going to go here and copy the depreciation, because remember your cash expense is, is only total minus depreciation, so you're not paying any cash for this. So you have to always make sure you're doing that budget, that it's not the total overhead. Same thing with administrative expense. It is the cash portion. So we're going to copy it. Then so your total payments are here. You add it up and you're done, okay? You got that, Team 5? You should be able to knock that out, though you're 2 out. They just, administrative expense work the same way. Did somebody have a problem? Jasmine, was that you?
I wanted to take a picture of the top so I can go back over it and see what I don't get before tomorrow too. Then.
Oh, you want to take a picture of the sales budget?
Yes.
Okay, that's a good idea, Sis.
Okay.
Got it?
Yes, sir.
Here's the bottom part.
Okay.
I have one more question.
Yes.
Okay, so for the last column, column 4, you said I have to use the amount for the one following it, but do I just follow the pattern, or do I use that 10,000? I'm doing production mark budget.
You're doing the production budget, and what you hear?
Yeah, so for column 4, inside of the desired ending inventory, do I follow the pattern or do I do half of 10,000? Because I would have to know what 5 is.
Column to the right. To the column. So what you're gonna do is you're gonna go to year 2.
Hmm?
We gotta go to the next year.
How many years do you need me to do?
I need you to do. So you gotta have year 2, quarter 1. Year 2, quarter 1 is what you need. How you gonna get year 2, quarter 1? So what you might do is you might come in here and do the break-even year and come up with a quantity. So now you can come over here and do the break-even year, get a quantity, then realize that 10% of that quantity would drop. Where's your reduction budget at? Did I skip past it? Okay, so quarter 1 amount is going to come from year 2, first quarter, year 2, quarter 1. So you're going to calculate that. Remember, it's 10%.
10% of
The break-even year quantity.
break-even year quantity.
And you're going to bring it back. So it looks like she's almost home, so she can give you all y'all numbers.
Well, because you kind of lost me right there. So that 10,000, do I use that as a reference?
So, 10,000 is over with for this calculation.
Oh, I skip it. That's just there to calculate totals.
Yeah.
So for year 4, I use the year 2, quarter 1 as a reference.
Correct.
Okay. Thank you.
That means you got to calculate the quantity for the break-even year.
Okay.
10% of it. Got it now?
Yes. Thank you.
So you try to finish that so they have it before they leave. Any other questions by anybody? Sales budget people, you all know what y'all doing? I mean, selling expense people. This is the easy
You go
one.
back to my team. I don't know what you said my new team thing was. You changed our thing.
Say what now?
I don't know what you put because you changed our team thingy, so I don't know which one was my team. Can you go back to it?
Who is this?
Team 6.
Which one we go back to?
Where you put the team stuff, whichever team doing what.
Oh. Okay, team 5 had the budget. Team 6 had administrative expenses.
Okay, that's good.
Team
Right.
2 had selling expenses. Manufacturing overhead, team 6.
You got 2?
Labor, team 5.
What?
Raw materials, team 3. Production budget, team 4. Now, next Tuesday, you won't have to worry about that. You know, your team will have one by itself.
Well, see you at 3 o'clock tomorrow.
So what we have, a lot of the budget, but they're real small. Some of them, some of them are only taking 10 or 15 minutes. So they don't take a lot of time, but you just got to make sure your numbers are correct. So you're coming up with a journal entry, and your bottom line, you're coming up with a number that's going to come on this cash budget, so that we will be able to determine whether we need to borrow money or not in our manufacturing company. So that's what we're doing.
So Professor Boyd, we have to do two things. We have to do the journal entries that you put next to the teams, and then we also have to go back and put information in for the budget.
Correct. You got those two things to do.
So do we have to make our own journal entries? Because on the file that you sent us, it doesn't have those like where you put the teams. It don't have those. It just has the budgets.
Well, I assume you had the journal entries.
I don't see them. I don't see the journal entries that have like the.
But they're in the primer.
Oh, they're in the primer. Okay, so you just want us to take those and literally just have those done, and then.
Correct.
Okay.
Yeah, this whole everything we're looking at is in the primer. Okay.
Okay.
Any other questions? Production budget, are we finished yet?
No. But I'll give it to the rest of the class before the night ends.
She's going to give you the units to be produced. And once she gets those units to be produced, you can always calculate your own units to be produced too, since eventually you know how to do it. You can compare it to her units to be produced. But look how the raw material and labor budget is units to be produced, which comes from the production budget, which comes, and this top number comes from the sales budget. And that number comes from your calculation of your quantity of sales, which comes from your calculation of total fixed costs, contribution margin, variable cost, and selling price. So you have to be very careful on those assumptions, because if you make a mistake, a whole lot of stuff gonna be wrong. Okay, so I should be in office hours at 3 tomorrow. Your principal's one runs over, 3:15 or so. Just depends on whether they run over or not. But if they don't run over, I'll be there at 3. I'll try to be there at 3.
Okay.
All right. See you tomorrow.
Do I use these numbers, or do I use the ones that we calculated later on?
Say that again.
Because we have these numbers, but we also did another one where we had like a different set of numbers. Do I use these numbers, or?
Not sure what you're saying.
If you scroll down, oh wait, scroll up a little bit. A little bit more. Yes, do I use that?
Yep.
So don't use the ones that were just a little bit, don't use the ones that were above that.
No, we pulled them out of there. So remember when we did the thing and the fixed cost stayed the same all the way across?
Mm-hmm.
So that's still gonna be the case. Your fixed costs are gonna be the same.
Okay.
Your contribution margin is gonna be the same. You're trying to get this quantity number. You just gotta use the right formula.
Okay, because at the bottom, this contribution says 300,000, but if you scroll up, it says 30.
Only you got to be, the contribution margin has to be on a unit basis.
Okay, I'll figure it out.
Has to be, it's not the dollar amount. Remember, all of these costs, you got other costs here, but it's the cost of one unit. Okay?
Okay, yeah, I just need to refresh my memory on that, I guess.
Yeah, okay.
Okay, thank you.
Welcome. Okay, so let's make sure we include all of our team members. Denarian, you still don't have a team? Jenkins?
No, sir, you had put me like in team 7 or something on test day, on the last test.
Hold on.
Let's see.
Hey, Professor Boy, I have to go ahead and log off. I'll see you tomorrow at tutorials.
Okay, Denarian, why don't you go, since they kind of weak, it appears. Why don't you say something, Denarian?
Sir, what you say?
Why don't you say something?
When about my group?
Yeah.
You had on
But
the
nobody,
midterm, when we took the midterm, you had put me in the group. You told me I was in group 7 on.
but nobody else said it. Why don't you get with team 2?
All right.
They're doing selling expenses. They've been quiet. You think you can handle selling expenses?
Yes, sir. I can help him.
So, do you know Kanisha Alice, Jakira Demas, Tryon, Sylvester? Tryon was on here. Taya Jones, Zaria Dixon. Any of those people here? Zaria, you're here, right?
I'm here.
All right, so, and Kanisha's here. Okay, y'all get him on your team. He's a pretty good guy.
Okay.
So he'll work with you all team on out.
All right. Professor Boyd, can you check your email,
right.
please? I emailed you yesterday.
Who was that? Jasmine
I emailed
Krishan.
you Friday.
or Krishan?
I emailed you Friday, Professor Boy. I don't understand why you are not receiving my emails. That is super strange.
It's best to check me in office hours because I get hundreds of emails and I'm trying to grade y'all stuff, prepare
And
for
they,
classes and stuff like that. But I
I
will
didn't,
check for those emails.
I want
from
to discuss my
John
quiz
and Jan.
because I didn't turn my quiz in.
You didn't turn your quiz in.
And you know, I've never done that. No, I didn't turn my quiz in because I got 2 quizzes. I didn't know which one to do.
Neither one. You said you didn't have one at first.
I
Oh,
didn't
you
have
could've done-
one, but then all of a sudden I got 2 quizzes.
Well, you said you didn't have one, but you can do both of them. You should have done both of them. Okay.
I just don't want to get a 0 for it, but I did do both of them. I did the,
So you email. I didn't look at it. Krishan, you say you emailed me.
Yes, remember in tutorials yesterday, you told me to find it. I found that assignment and I sent it to you, but I did not put my whole group name on it. I did not.
All right.
It's sent there.
Okay.
oh, and wait, Professor Boyd, can I show you something? Hello, I need to show you something.
What you need to show me? All right, Dash, you on the case with your team now?
Somewhat. Now they're just not telling me the numbers to use, so I'll come up with them and be wrong enough until we get right.
Okay, work with them. You're on mute, Jazz.
Oh, So I found this financial statement for the product we're doing which is Germex, and it doesn't look like yours.
We'll just make it
I'm
look
not.
like, get an idea, then make it look like mine.
I wanted to show you. Can you see that? This is a financial statement for it, but this is from like 2017.
That's fine.
Is this fine?
Yeah, just work with some numbers and get it on your scale of how many you're doing.
Okay. And let's do it at 11:59. Let's do it at 12.
I might extend it.
Please, because this is a lot of numbers.
All right, I'll extend it.
Thank you. Oh my God. But I'm about to work on it right now, though.
All right.
Thank you, Professor Boyd.
You're welcome.
All right, bye.
All right, bye. We'll see y'all tomorrow. See you tomorrow, Dash, hopefully.
We'll try.
See you tomorrow.
All right.